Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. If you like making money, this channel's for you. Subscribe to the channel, give me a thumbs up, leave comments below if you guys have anything, any questions about anything. I was going over some articles, just want to touch on these. It says Elon Musk says Tesla is shifting more electric cars to LFP batteries over nickel supply concerns. So it looks like Tesla's also worried about nickel in terms of the supply. I'll go down here and just read a couple of quotes here. They're going to the LFP. It's an iron-based long life cycle battery for some of their cars. Nickel's our biggest concern for scaling lithium-ion cell production. That's why we are shifting standard range cars to iron cathode, plenty of iron and lithium. It says, well, I'd just like to reemphasize any mining companies out there, please mine more nickel. Okay, wherever you are in the world, please mine more nickel. And don't wait for nickel to go back to some high point that you experienced some 5 years ago. Whatever, go for efficiency, obviously environmentally friendly nickel, mining at high volume. Tesla will give you a giant contract for a long period of time if you mine nickel efficiently and in an environmentally sensitive way. So hopefully this message goes out to all you mining companies. Please get nickel. Yeah, there's going to be a shortage of nickel. Another one I was looking at, it says Shell sees LNG demand nearly doubling by 2040. Oh, that's a pretty good amount. Not going to read too much into it. Here's another one. Bank of America expects fastest oil price rise in 30 years. And this was February 25th. Oil prices are set to rise by the fastest rate since the 1970s over the next 3 years. Bank of America said in a new report, joining the growing group of analysts forecasting a return of oil to three-digit territory. We talk a lot about oil on this channel, and I completely agree. I think we're going to see $100 easy. I don't know how high it's going to go, but it's a lot higher than where we're at today. It says, we believe that slower shale growth, that's okay. We've got Stanley Drunkenmiller, tips from Stanley Drunkenmiller. Commodities, Asian stocks, and big tech is what he likes. He's a hedge fund manager, or used to be a hedge fund manager, had one of the highest returning, we'll call it portfolios, year after year after year. I don't think he ever had a down year in like 20 or 30 years. His average was like 30% maybe per year. It says in 3 months, we increased the deficit more. He's talking about money supply. Deficit more than if you took the last 5 recessions combined. So he thinks lots of money printing. Go down here. He goes, why does he like commodities? The billionaire CEO of the, however you say that, family office, which he converted from the hedge fund, explained his sizable holdings in commodities as a response to macro forces, namely low interest rates threatening to spark inflation rates and a large boost in demand for safe haven assets. Some commodities have been surging since last year, with copper, gold, and silver climbing at least 20% over the trailing 12 months. He says the longer the Fed tries to keep rates suppressed so that they'll have stimulus in the pipeline, the more I win on my commodities. I like it. And I agree. He also likes Asia. He also likes some big technology companies. You can go down there. He goes, if you actually look at the Amazons, the Googles, and the Microsofts of the world, they are not overvalued. They are bargain names. And they are currently out of favor is what his opinions are. So we disagree on some stuff. Overall, I agree with his call on the dollar and commodities. So those are the articles I was reading. We're seeing some substitution in some areas. We're seeing lots of demand growth for liquefied natural gas. Some banks and a lot of analysts are starting to forecast triple-digit oil prices. That's kind of what I was thinking. And then we've got some of these big hedge fund guys with really good returns, history of returns, saying commodities are the spot to be, and that's where they like. So I agree with them. I just wanted to share this, with some articles that I was reading over time. If you guys like this content, subscribe to the channel, give me a thumbs up, leave comments below on what you guys think. Do you agree with their assessment, or do you think that oil's not going to go as high as triple digits, or do you think Stanley Drunkenmiller and the commodities pick isn't right on, or maybe his big tech isn't? Let me know. Thanks for listening. This is Finding Value.